Like the idea of owning golden geese laying ever more golden eggs, does living off of dividend income that grows all by itself sound like a dream? Want to know about dividend growth stocks that continue to reliably increase their dividends? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. I look at high quality dividend growth stocks as golden geese, and these golden geese lay golden eggs. Those golden eggs are, of course, dividends. Best of all, the pile of golden eggs that a true golden goose can lay grows and grows and grows. That occurs via dividend increases. Those dividend increases are possible because profit is increasing, and profit is increasing because you're running a world-class business. It is a virtuous circle. If you want to live off of safe, growing dividend income, you want to own high-quality dividend growth stocks for the long run. Today, I want to tell you about 6 dividend growth stocks that just increased their dividends. Ready? Let's dig in. The first dividend increase I want to highlight is the one that came from Essex Property Trust Inc., stock ticker ESS. Essex Property Trust just increased its dividend by 5%. Good stuff. Essex Property Trust shareholders are now getting 5% more dividend income for doing nothing other than holding the shares they already had. That's how easy dividend growth investing is. Dividends are the most passive form of income I've ever come across, and dividend raises are the easiest pay raises I've ever come across. This is the 29th consecutive year of dividend increases for the multifamily property real estate investment trust. We've got an esteemed dividend aristocrat on our hands. For nearly 30 straight years, Essex Property Trust has been delivering the goods, acting as a golden goose, laying ever more golden eggs for its owners. The 10-year dividend growth rate is 7.2%, although more recent dividend raises have been in this mid-single-digit range. Meanwhile, the stock offers a compelling 3.8% yield. And based on midpoint guidance for fiscal year 2023 core funds from operations per share, the payout ratio is 62.6%. That's actually quite healthy for a REIT. In my view, Essex Property Trust is a no-brainer long-term investment here. In fact, I named it as one of my top 5 dividend growth stock ideas for 2023. We last analyzed and valued the REIT late last year, showing why fair value was estimated at just under $300 per share. The stock is currently priced at right about $230. I see a lot of upside on this dividend aristocrat offering a near 4% yield, and it only looks better after yet another solid dividend raise. The second dividend increase I have to cover for you is the one that was given out by Genuine Parts Company, stock ticker GPC. Genuine Parts just increased its dividend by 6.1%. Okay, not the biggest dividend increase in today's video, still, it is more money. What Genuine Parts might lack in terms of huge growth, they more than make up for in terms of incredible consistency. The automotive parts company has now increased its dividend for 67 consecutive years. Wow, as someone who loves to own businesses that can demonstrate the ability to reliably increase dividends over the course of decades, I absolutely adore this track record. It's one of the best out there. The 10-year dividend growth rate of 6.1% is yet another hallmark of the legendary consistency. That lines up pretty nicely with this most recent dividend raise. The stock's yield of 2.1% is a bit lower than I'd like to see it. Then again, based on midpoint of fiscal year 2023 adjusted earnings per share, the payout ratio of 42.8% indicates that this dividend will be increased in about a year's time, yet again, just like clockwork. There is so much to like about Genuine Parts. except the valuation. Love this company's commitment to dividend increases year in and year out, no matter what. Even among fellow dividend aristocrats, Genuine Parts is royalty. It exists in rarefied air. Unfortunately, that kind of quality is commanding a pretty hefty premium right now. Just about every basic valuation metric I look at is well above its respective recent historical average. The price to cash flow ratio of 17.4 is quite a bit higher than its own 5-year average of 13.1. On the other hand, using that aforementioned adjusted earnings per share guidance for the coming fiscal year, the forward PE ratio is 20.2. Not totally unreasonable for this kind of business, but I'd really like to see a good sized pullback here. The third dividend increase I want to bring to your attention is the one that was announced by Home Depot Inc., stock ticker HD. Home Depot just increased its dividend by 10%. How can you not love this? A 10% quote unquote pay raise for doing nothing other than being a shareholder? That's about as good as it gets in life. I've said it before and I'll say it again. Home Depot ought to be thought of as the Dividend Depot. This marks the 14th consecutive year of dividend increases for the home improvement retailer. What's great about Home Depot is the way in which they consistently increase the dividend by a double-digit rate. The 10-year dividend growth rate is 20.7%, and last year's dividend raise came in at over 15%. A deceleration, sure, but the U.S. housing market has been due for an epic correction. Home Depot coming through, despite it all, is evidence of just how reliable this business is. The stock yields 2.8%, which is 60 basis points higher than its own 5-year average. And even after that dividend boost, the payout ratio is an even 50%, which I regard as essentially a perfect payout ratio that exactly balances retaining earnings against returning capital back to shareholders. Home Depot isn't super cheap, but I think it's a pretty good long-term idea right now. Our last full analysis and valuation video on this business came out back in September. In that video, the estimate for intrinsic value came out to a bit under $350 per share. The stock's price is now at under the $300 mark. This is one of the best retailers I've ever looked at, and being able to buy in at a reasonable valuation with a near 3% yield, fresh off of a 10% dividend raise, all of that sounds pretty good to me. The fourth dividend increase we have to talk about is the one that came courtesy of Intercontinental Exchange Inc., stock ticker ICE. Intercontinental Exchange just increased its dividend by 10.5%. Boom, another double-digit dividend raise. You know, I could kind of get used to this. It's a tough life being a dividend growth investor, but I think we can manage, right? The global financial and technology company has now increased its dividend for 11 consecutive years. These dividend metrics are really nice for younger dividend growth investors who are more interested in long-term compounding over current income. The 5-year dividend growth rate is 13.7%, so double-digit dividend growth is a pretty common feature here. And with a payout ratio of only 31.7% based on fiscal year 2022 adjusted earnings per share, it does seem like more double-digit dividend growth is on its way. The only issue here is the 1.6% yield. As I just alluded to, it's not an income play, it's a compounder. I think this is a terrific business that should make its shareholders very wealthy over the coming decades. If you want cheap yield, you can find that elsewhere. Of course, cheap yield tends to perform quite poorly. You tend to get what you pay for. This business, on the other hand, just continues to print money and make its investors a lot of money, as evidenced by yet another strong dividend raise. We recently put out a video analyzing and valuing the business, estimating its fair value at right about $120 per share. This business owns the New York Stock Exchange. The stock market store is my favorite store, and high-quality dividend growth stocks like this one are my favorite merchandise. Plus, my merchandise pays me more and more to buy and own it. Pretty sweet. Next up, let's have a quick discussion about the dividend increase that came from PepsiCo Inc., stock ticker PEP. PepsiCo just increased its dividend by 10%. Yet another double-digit dividend increase from yet another high-quality company providing the world with more and more of the products it demands, and doing that providing to more people at higher prices. This is the 51st consecutive year of dividend increases for the global beverage food and snack company. PepsiCo is living up to its dividend aristocrat status here. When I was born, this company had already been increasing its dividend for more than a decade straight, and I'm no spring chicken anymore. The 10-year dividend growth rate is 7.8%, so this most recent dividend boost was actually outsized and most welcomed by shareholders. The stock now yields a respectable 2.9%, and the payout ratio, based on midpoint guidance for fiscal year 2023 core earnings per share, is 69.8%. Higher than I'd like to see it, but PepsiCo has been operating with an elevated payout ratio for a number of years now. It's one of my favorite businesses. Not cheap, but it is a wonderful long-term compounder. I've been investing for more than a decade. Guess what I've consistently heard about PepsiCo for the entire time? That its stock is too expensive. Well, all PepsiCo has done over the last decade is grow the business and compound its shareholders' wealth at about 12% annually. What's it worth to have your wealth compound at a 12% clip annually from a very predictable, low-risk business model? I think that's worth quite a bit. The forward price earnings ratio based on that aforementioned guidance is 24.3. The stock's 5-year average PE ratio is 25.5. I see nothing egregious here. Decades from now, I think shareholders are going to be very happy with their investment. Those complaining about expensiveness will still be doing so and missing out. Last but not least, let's talk about the dividend increase that was announced by Prudential Financial Inc., stock ticker PRU. Prudential just increased its dividend by 4.2%. The smallest dividend increase I'm featuring today, yes, but here's the thing. When you own a diversified portfolio of high-quality dividend growth stocks, things tend to average out nicely. You might get some small dividend raises here and there, but then those big double-digit dividend raises will come in and boost the overall average. The global insurance and investment management company has now increased its dividend for 15 consecutive years. This name works really well for income-oriented dividend growth investors. That's because the stock yields 5.1%. That's about 3 times higher than the broader market's yield. It's well into the territory of income vehicles like, say, REITs. On the other hand, the last few dividend raises have been in this mid-single digit range, and that's a pretty reasonable expectation on a go-forward basis. The payout ratio is 52.9% based on fiscal year 2022 adjusted earnings per share, indicating more of the status quo. To my eye, this stock looks fairly valued. We put out a full analysis and valuation video on the business back in late October where the estimate of intrinsic value came out to $102.60 per share. Notably, my dividend discount model analysis in that video estimated a long-term dividend growth rate of 5%. So we're roughly on pace here. With the stock currently trading hands for about $99, I think we're basically sitting at fair value. Still, if you're in the market for a 5% plus yield and you're okay with that dividend growing at a mid-single digit rate per year, Prudential is worth a closer look. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these dividend increases. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.